Life Management Science Labs would like to acknowledge that we live and produce this podcast on the traditional lands of the Wurundjeri people. We'd also like to acknowledge the traditional owners of the lands of our listeners and our international colleagues. We'd like to pay our respects to their elders, past, present, and emerging. Hi, and welcome to Self-Improvement Atlas, the Personal Science Insights podcast produced by LMSL, the Life Management Science Labs. We are champions of life management science, providing structured insights informed by science and inspired by practice on key aspects of conscious living. Each week, we bring you scientific and practical insights on each element with the expert knowledge of professionals in the field. I'm Marie Stella, your host from Melbourne, Australia. Let's start the show. Welcome back to Self-Improvement Atlas, the Personal Science Insights podcast. Today we're having a look at banking products, which, as usual with every other finance-related topic, I have no prior knowledge of whatsoever. So we're learning together in this one. Banking and finance professor at UNSW, Dr. John Paul Monck, is graciously spending his time with us to highlight how banking products can be useful in our personal growth journey and how it can help us achieve financial independence. Hi, John, JP. It's so great to have you on the show. How are you going?
Thanks, Barry. Good, thank you. And thank you for having me.
Amazing. So tell us a bit about your background and how you got started in this, how your interest in this sparked.
Yeah, sure. So I guess prior to the financial crisis, which is going back a little while now, 2008-9, I started out in business and private banking at the Commonwealth Bank. So had some first-hand sort of experience on that side, which was kind of fun and fascinating. And then I fell into regulation when I joined APRA during the height of that crisis, and have sort of spent a lot of time studying and researching various sort of aspects since then, and have spent a lot of that time in consulting capacities and in the neobanking space as well, in addition to teaching in the field more recently.
That's great. Do you like teaching now?
Yeah, it's fun. Keeps you on your toes a bit. So it's a mix of undergrad and postgrad. So sometimes in the MBA programs and some master's programs. So it means there's a blend of practitioner kind of lived experience as well as some of the theoretical perspectives.
That's amazing. Did you ever picture yourself teaching?
Probably wasn't something that I had on my plan, certainly as a student, but has been really enjoyable as the opportunities came up.
That's great. All right. So before we get started, we'd like to get to know you a bit better. This is, have you met Dr. John Paul Monck, or as you like to be known as, JP. So let's get to know JP. What is your favorite book?
It varies. I guess Existentialism is a Realism, I think, by Jean-Paul Sartre was probably one that was really fascinating. But that's sort of deep into the philosophical kind of stuff.
He has the same name as you.
Yeah, his is the French spelling though, so it's a bit more exotic.
Oh. So what's your favorite thing about this book?
I think it just opens your mind to kind of a lot of depressing realities about existence in some capacities, but then also points out the need for one's own opinion or perspective on how they should live their life. And a lot of what he kind of professed was around this notion of what it means to be free or to be independent, which is a useful kind of theme for what we're talking about today.
That sounds awfully meta. We love depressing realities here. Do you have a favorite film?
Again, it sort of varies a lot. I liked Fight Club for similar sort of reasons for most of my youth. And more recently, I thought Dune was pretty cool, but we're waiting for the second part of that.
Mm-hmm. Cool. Do you have a favorite podcast? No pressure to say Self-Improvement Atlas, but...
Yeah, look, it probably is this one. I haven't really got addicted to that many, but yeah, this has been interesting so far.
Thank you. I will take that compliment, but at the same time, none of my episodes have come out yet, so I can't actually receive that compliment.
Ah, sorry.
What's the what's the most recent course you have completed?
One was around, I've actually just finished one in computer science, so in Python, which was quite different to anything I've done before.
Have you done coding before?
Not a great deal, maybe some HTML and some Commodore 64 as a small child. So yeah, it was terrifying, but quite fun.
Amazing. Now moving on to the interview and getting to know all about banking products and how they help us in our personal development journey. First question, first and foremost, how do you define personal development?
Look, I think there's a lot of different perspectives. So some of it can be about your mind, your body, your spiritual, if you sort of swing that way. And then I think a lot of personal development automatically gets pigeonholed into sort of career stuff, for most of one's working life. But I think all of those aspects are potentially equally important, and some scream louder than others at different times in our lives.
Yeah, that's absolutely true. I think my perspective on personal development was always just like kind of soft skills and never really anything to do with career or finance in the first place. So, but it's absolutely part of one's personal development journey. Just it's also like learning how to be more responsible, and that's definitely developing yourself. So, I'm actually very excited to talk to you today. I know it doesn't sound like it because, like, who's excited about banking products? But, it's learning things and I enjoy learning things. So, uh, yeah, but before I get sidetracked, what are some of the main challenges in personal development, in your opinion?
I think with a lot of aspects of personal development, you don't necessarily know what you're lacking, until it's too late or until it hits you in the face. And sometimes that's feedback from mentors or peers. So I think it's the unknown unknowns that's the difficult one.
True. How do you define banking products? What do they consist of? What do they look like? I mean, not look like, but like paint us a picture here.
I think technically, I mean, you could take a different sort of route, but I mean, any product that's offered by a bank, technically speaking, is a banking product, I suppose. If you take the regulatory framework view, though, it's the Banking Act would define it as the taking of deposits and making of loans. So in the strict sense, those are the two fundamental sort of aspects. But that manifests in many different ways, and different ways that people interact depending on their life stage. And credit cards used to be very popular amongst young people. They're kind of not cool anymore. We've had the buy now, pay later, which is not really a banking product, but banks have certainly entered the space, and it's kind of in that blurred line at the moment. So I think it's understandably fairly confusing, or at least it should be to most punters. And to what extent crypto style products relate to that field as well is yet to be seen in many ways.
So, what are some of the most popular routes with banking products these days?
Oh, look, I think once upon a time, you'd get introduced through your school to some sort of regular savings plan, which was really just a deposit account that you put a dollar or two every week into, and then you learned about the magic of compounding interest in terms of your money growing from you doing nothing, which is great. That I don't think is offered anymore. So that means that there's a bit of a gap in terms of how do young people in particular get to understand, how that all works. And apart from what habits, I suppose, their parents pass down to them, which varies, quite wildly between one household or another.
So, how can these banking products help people with achieving financial independence? And also, feel free to add in any specific examples you might have.
Yeah, look, I think it's kind of like brushing your teeth. It can be like an incredibly boring concept in its own right, and the product itself isn't going to solve many problems. But it's more about how do you use that to achieve goals. So I think, and none of this is financial advice, I have to say, for compliance reasons. But I mean, most advisors would tell, particularly young people who haven't really thought about it, what are your financial goals? And if you don't have any, maybe start thinking about what that might be. And that's starting often with the most boring concept of all, which is having a budget, whether it's weekly or monthly or whatever. And that's determining how much do you earn and then how much do you typically spend. And what kind of lifestyle habits do you have or would you like to be able to afford? And that kind of gives you some idea of what the gap is in terms of your goals with respect to income, but then also challenging, to what extent do you really need certain goods or services on a regular basis, and can you afford to save some amount? And of your savings, how much of that do you leave in a deposit account that earns, a minimal amount of interest? It's less than the inflation rate at the moment. And to what extent do you, quote unquote, invest? And in what sort of way do you do that? And I think that's a really tough one, particularly for young people who maybe have thought about finance in a theoretical sense, but it's not like they can build a very expensive portfolio from the ground up. So the options available to them are fairly limited. So where do you start, I think, is the biggest sort of challenge to tackle.
Yeah, that's a lot of factors to consider there. But for people who have already kind of laid the groundwork with like, what's my budget, what are my expenses, what do I save every month, and so, what is the next step? Where do they go from there?
I think it depends what your bigger, like, long-term life goal is. It used to be, and for many people it still is, that we have an addiction with property ownership in Australia. And that's a harder and harder goal to reach for because as a young person, you've got some sort of deposit that you've got to be able to save up. And that's the hardest part in terms of you're probably early in your career journey, so you have a lower income with respect to what you will have later. Rents are increasing at the moment, so it feels like an impossible goal to get on top of. But I think using a combination of setting aside some money and saving it prudently, which is great, but also putting some at risk. So that might be dabbling in the stock market. It might be in exchange traded funds or ETFs. Some young people have gambled and succeeded on crypto, whether it be Bitcoin or Ethereum or whatever. Those are risky kind of strategies, but there are tried and true sort of ways that you could more conservatively invest in something that's like an index related fund or something to that effect, which over say a 5-year period, if your goal is to build up such a deposit, will grow faster than simply you putting cash in your mattress or something like that. So they're all different crazy ways to try and do this in a safe sort of fashion. But I think just having sensible kind of foundations to those plans will certainly help in terms of getting a head start on the journey.
Yeah, that all really does make sense. What's your biggest advice for people who might want to consider doing some of the risking that you just mentioned?
I think do the research, and it's really hard because there are so many differing sources. A lot of them are misinformation. There's lots of scams, like in terms of if you put $1,000 here, they will turn it into 3,000 because of some magical transaction that's going to happen. It's probably not. So I think always start with the principle that if something seems too good to be true, it most probably is, almost certainly. But then at the same time, you can seek financial advice as well. And I think, you're never really too young for that. You don't need a $10,000, $20,000 financial plan either. I don't think there are some options that are available that are a lot cheaper, that incorporate elements of self-service, but also provide a lot of kind of financial education, whether it be through videos, exercises, and other bits and pieces, just to consider all of the aspects that you have to take into account. And no matter where, if you have any kind of income from work, you will have a superannuation balance as well. That will feel extremely depressing because you've got 40 or 50 years before you'll even be able to think about touching it. But I mean, you should really start at the beginning in terms of, hey, how do I ensure that I maximize my return on this? And I think if you're very early in your career journey, you have those decisions to think about. Do I want to be in a cash or a balanced portfolio, or do I want to think about a high growth kind of allocation for what is going into my super? Because that's going to compound over a very long time. And if you've got a long timeline to accumulate and grow that, then your risk appetite would be different than someone who's thinking about retiring in the next, 3 to 5 years.
Yeah, absolutely. And financial education, especially in this day and age, is so important. How do you think financial independence might support one's personal growth journey?
I think it unlocks a whole lot of avenues because quite often, particularly earlier in life, you have, I mean, everyone has unlimited wants, I suppose, whatever that happens to be, whether it's traveling the world, jumping out of a plane, buying a waterfront property or whatever it is. And some might just want to give back to the planet that gave their life to them. Whatever that cause is, though, you can do a whole lot more if you have resources available to you. And if you're starting from scratch, that means you have to grow them from pretty much the ground level. But I think the more education and the more of a strategy you have towards being able to do that, the greater your chance of being able to achieve those goals will be. So that means investing some time in what is inherently quite technical and quite soul destroying in some ways to learn about. The more time you invest in that, just to know what all the options are out there, is going to help in terms of being able to make better decisions.
So, what are some strategies or methods you'd recommend to people who want to achieve financial independence while maintaining personal growth?
Yeah, I think it starts from the dismal science, I guess, being economics. So that is, you've got constraints around what you can afford right now, and it's from really practical steps in terms of what are free ways that I can obtain reliable information that I can use on my growth journey, and even in a physical sense. Do you need a flashy gym membership that provides you with, free towels and milkshakes and whatever else? Or are there other ways that I can achieve the same goal? So I think even going down to a tin tack level of, what is it that I enjoy from this activity? Is it that my friends are here or I have like an accountability group or whatever comes from that? And are there ways that, those friends can be intelligent and work together to achieve the same goals for a lesser cost? So it means, for the accountant, accountancy-minded people, which is a certain flavor of human. They'll always be able to think about how can I achieve the same utility or goal for a lesser fee, and that might be different subscription services. It might be binging on one thing and dropping it the next month, rather than leaving all those things open at all times and having multiple expenses running side by side. This isn't fun by itself, but I think when you look at how was I able to retain more of my income from month to month, and always measure like your success relative to it. One thing is having a budget, but then the other thing is actually looking back on July that just happened and say, well, okay, here's what I said I would limit myself to. What actually happened? I think most people don't want to answer that question, therefore they don't ask it. And this is true of companies as much as it is of people. But I think that's critical to ensuring that you are on track. And if you're not, then understanding what steps will it take to get there.
Yeah, I'm going to be really honest. I am very guilty of that, of not wanting to ask myself that question. And also, like, all these subscription sites make it really, really difficult for you to back out now, especially like streaming sites. Because, like, if you share your account with a bunch of other people, you split the cost. It's like you can't just for 1 month tell everyone, hey guys, I don't want to do this anymore, see ya next month, or that's not like the most polite thing. So that's another thing to think about. um yeah.
I never really considered shared accounts as a retention strategy, but maybe secretly the streaming services don't mind us so much because of what you just said.
Yeah, exactly. I've been thinking about that a lot because I really don't use Netflix anymore, but I can't really say, hey guys, find someone else, I'll come back in 2 months, you know? Um, so, what are some challenges that you've noticed people experience in their quest for financial independence?
I think quite often people make poor decisions, as do companies, because they didn't really understand the decision they were making at the time. And this includes things like if you're considering taking out a personal loan for whatever reason, maybe it's to buy a car, maybe it's for the technology you need, particularly while studying, or even for income generating purposes, or a credit card product, or something to that effect. people don't understand what it means to pay interest, or what does it mean when you have compounding interest and paying it off. Say you've got 60 months. What if you paid it off in 48 instead? And then apart from a comparison rate tool which says what is the percentage that it's supposed to cost you, the small print is that's a specific amount over a specific term. So you would benefit from actually entering that into your own Excel sheet, or trying to understand what is the total amount of interest I'm going to pay over that period. And if I paid an extra $20 a month towards it, then what is the minimum contractual requirement? Then, how much would I actually save over that period? So again, this is not a fun activity that you'd instantly gravitate towards doing. But if you do invest the 5 minutes it takes to perform that analysis, then you'll sort of appreciate how much that's costing you. And on the other hand, if you have a net sort of asset position, as in you don't spend much and you're contributing towards savings, the corollary is also the compounding effect of interest that you're earning.
Does it actually... Sorry. Does it actually take only 5 minutes?
Oh, look, once you've done it a couple of times, yes. I think maybe the first time you sit down with it, it might be frustrating and it takes a little bit longer. And this is where, having an education tool or a website or even a friend who's more well-versed in it to kind of help go through the first time. Once you know how to feed yourself effectively, it's a lot easier to come back and use those same tools again. So putting that in a safe place, probably wherever you save your budget, and most people don't. So starting with that in the first place can be helpful so that you can revisit this. One of the most depressing things you can do as well is, eventually think about life insurance. And you have to ask yourself the question, how much is it worth if I die right now? Because that's effectively what you're answering when you say, what size of a life insurance policy should you be taking out? And I asked myself that question, probably spent about an hour ruminating over it, and thought, okay, well, here's roughly what I think I should set aside for that. And whether you have a family yet, or you have a pet or whatever, if you haven't got a will, you sort of think, okay, well, if I died right now, I guess I'd throw all my stuff in the bin and my corpse would be disposed of. Even your funeral is part of that. So this is where existentialism is a useful philosophy to start with. But the other thing as well is that most people don't understand that life insurance, or at least some death benefit, is included in a superannuation policy. So even if you're pushing trolleys at Woolworths or Coles or whatever, there's a good chance that something like a $500,000 policy is attached to that. So if you died, then your parents or somebody would benefit from that amount. If you haven't nominated the person, that should be legally scary, because you don't know whose hands that's going to end up in. But later on in your career, and when you have dependents, you should be thinking about that even more.
Interesting. I never thought this far into it, and now I feel like I'm sorely lagging behind. And it's the same way I felt when we were talking about estate planning on a different episode.
Sure. And you probably not. Yeah. Most people probably don't think too much about it. It's not something that you default to until prompted.
Yeah, it's really not, especially if you whatever that you're doing or have studied, or whichever industry you're in, just really doesn't coincide with all of this. It's like if you study law or finance, these things kind of just intertwine with what you're doing already. So you just naturally get indoctrinated, and then you just start thinking about it. But for people who just, that has never been a thing to talk about a day in their life, that really isn't something you default to thinking about.
Yeah, sure. And I think even lawyers or finance people probably don't. I mean, unless you're an actuary, so you're a very specific kind of finance person, then maybe you've thought about it. But even then, you've probably gone through all the joyful calculations for other people, and didn't necessarily think about your own circumstances.
That does give me some consolation and comfort. So thank you for that. So how can banking products help us to overcome these challenges?
Like I said, I think the products probably don't help by themselves, but I think using them intelligently can. So obviously, if you have a desire or a need for something in the immediate term, say you need a car to get to work so your income is higher, or you more reliably you can generate more income from multiple jobs or whatever, then that sort of justifies a case for, well, if I take out a personal loan so I can afford an asset that I can't pay for with the cash that I've got in front of me, then that enables me to earn more income. So I think generally that the use of debt is really important to be cautious about. A lot of people, especially young people, have described the use of buy now, pay laters as a great way to fall into a trap of future financial commitments that take away from your quality of life. Yeah, but thankfully it's only within the next 6 weeks or so that you feel the impact of that. But if you took out, say, a $20,000 loan to go on a holiday, that feels great, in the first instance while you consume that. But when you come home to having to make repayments every month, you're really borrowing from your future self. Yeah, that's how you should be thinking about it. So why should you be doing that? If there's any reason whereby your quality of life has improved or your income generating capacity has been enhanced by it, then those are good reasons to be using debt. And bear in mind as well that, as most people have learned, including mortgage holders, the rate of debt can change. Now, sometimes personal loans are on a fixed rate, so it means if it's 15%, it's 15% forever, and that's fine. But if it's a variable rate loan, that means that if the central bank rate goes up from 0.1% to 4.1, which is what's happened fairly recently, that means that your cost of debt goes up by 4% as well. And that can be pretty painful. And it means that your monthly repayments go up. It means what budget you've got left over has automatically shrunk by virtue of your commitment.
Yeah, I don't own a house myself, but I do have friends who do. And it is so anxiety inducing, just like the fluctuation. And I don't think I could ever get there. And also about the traveling thing, I don't think I could ever take out a loan of $20,000 to go on a holiday. That just sounds like a lot of anxiety for my future self. Um, so I'd rather not go on a holiday, but I don't, is
Yeah.
that, do people actually do that?
Look, anecdotally, there are all sorts of stories like this, and it doesn't have to be a personal
Yeah.
loan either. It can be a credit card. And remember, that's a product that presumably you're using to pay for stuff with because it's convenient. But ideally, you're paying it off every month. Or if you can't afford to pay the whole thing off one month, you only carry it as debt for a few months. But people fall into the trap as well of maxing it out. So if you've got a $10,000 limit and then, slowly your balance creeps up and then you hit pretty much the upper limit of it, then all you're able to do often is afford the minimum interest repayment. But then you're in a debt cycle where you're paying probably 25% interest, just to keep the card there so that you don't have a default on your credit file, which is pretty damaging. So in those cases, often the cure is, well, if I can get a personal loan at 10%, that's better than this sort of death loop that I'm in at 25. So at least I can pay off the card, potentially close it, or at least promise myself and carve it in blood that I'm not going to spend more than I am able to pay off every month. And then that personal loan commitment is probably substantially cheaper. And then you've got a defined time horizon that you're going to pay it off in, because otherwise you can have an unsecured debt that's open forever, and that will take away pretty much all your ability both to save, but also to obtain access to other kinds of credit like a mortgage.
So in this age, is it actually helpful to have a credit card?
It's not that bad. I guess it depends what you're doing with it. So I don't know if you follow Steve Huey, the points whisperer, but he's got a somewhat of a cult following, maybe of Gen X's and older Gen Y's to a large degree. But he teaches people how to try to scam the banks in terms of how do you get as many points as you can so that all of your travel can be essentially free. So strategies like that can be useful because whether you use a debit card or a credit card, you're probably paying an interchange fee at a merchant. So it's going to be, maybe it's 1%, maybe it's 2%. Now, the point of those points programs and whatnot is depending on what you use that currency, if you see points as a currency to spend on things, that can actually be a lot cheaper or more affordable than spending cash on things like holidays or even business travel from time to time. So I think using that or turning that on its head can be quite helpful. There are other ways that you can find products that will give you 2-3% cash back, for example, which is quite popular, maybe on some debit cards, but also on credit card products. So it's really acknowledging, yes, I'm probably getting ripped off every time I transact, using a non-cash method. But is there some sort of deal whereby I'm at least compensated for the expense that I outlay on that? Or if not, should I just be using cash to transact, which feels, even more backward in this year and beyond?
Thank you so much for that. That makes so much sense. And not gonna lie, I still don't quite understand the entire thing, but I do have a clearer picture of what this means.
No. And I mean, there are
um,
some products whereby you get a 2 or 3% that's kind of cash back that gets invested on your behalf. So you actually earn and compile an investment pool every time you spend. And I mean, like, you have to spend on some things, even if you're never turning a light on in your house and you just live on instant mee goreng like I did in my undergrad days, you still have to spend some money. So at least if you can minimize your transacting or the friction of those costs, or get compensated somehow for it, then that's helping you out to some degree, and that builds up
yeah.
over time as well.
And unfortunately, instant mee goreng is getting more expensive. So
That's terrible.
yeah, it's horrible. It's actually horrible because it's not even one of my depression meals. It's just one of my like celebration meals. It's a comfort food, but it's not a depressing one. It's it's something I would eat even if I have like a ton of money to spend. So that's quite sad. Um so, what suggestions do you have for people who want to effectively manage their debt situation and use banking products, or, as you said before, use banking products intelligently to improve their financial situation?
Yeah, I think it's very easy to fall into a trap, or even to deliberately sort of enter one. But you find that the best rate in the market that you can find isn't necessarily the one that you signed up for. And maybe the one that you signed up for at the time, made sense then and was the best one. But there are other products now that are cheaper. You can always refinance. You can always do a balance transfer, and you can always consolidate debts if you have 3 or 4 different kinds. Sometimes people get into a trap because they've got 4 or 5 different accounts, and then they've got these random sort of numbers that are being outflows to different places. And until you consolidate and add them all together, you don't realize what it's costing you, but you know that you always seem to be running out of money and you can't explain why. So I think going through that exercise of adding that up and recalculating what that is relative to your budget, that helps to clarify a fair bit of that. And debt consolidation is one way that you can kind of bring it all together in one place, and then make it a more manageable and more centralized sort of thing. And if you can get a better rate on that, then that's much better for you as well. I met a guy in the US once who bought a house that he didn't really want, and got a mortgage against it because borrowing more than the house was worth, but also paying off his student debt was better than having a student loan by itself. But yeah, that's a place where you have very high balances on student loans, and you're paying 10-15% on that amount as well, compared to the HEC system we have in Australia. So yeah, there are different situations for different people, but sometimes there's a left field or a thinking out the box kind of way that you can better yourself. Again, if you understand what products are there, and how can you sort of bend that to your benefit. So again, it comes down to being aware of the landscape, because most often people are not.
That's amazing. You really did a great job at making it feel more approachable. So, thank you for that. So now we're going to move on to the practice slash habit section. This is where we ask you some questions about the everyday application of financial independence, or banking products in this case. So, what regular practice or habit can help enable financial independence?
Yeah, so I'm pretty sad in that I'm a dual qualified CA and CPA. So there are spreadsheets for like everything. But I think one habit is to have a monthly budget spreadsheet of some kind where you set aside, what is your regular income, then in a separate column or however you want to organize it, pivot table if you're so inclined, what are all the expenses that you have commitment to, and leave some sort of discretionary budget as part of that, and then understand what's the gap in between. So what's the likely sort of surplus, and then try to estimate as well annually, do you have a tax liability? Do you get a refund? And if you, have a inflow, how do you sort of budget or allocate that amount of that lump sum as well? Because there's a difference between your cash flow and your income versus expenses. And if you're out of cash, that's when you can't afford to pay for stuff, and that gets a bit embarrassing or existential. So you want to be able to understand both of those things, personally and business.
So what are three good things about this practice?
Well, the good things are you know how much cash you should have left over at the end of every month. So, I mean, if you don't find that that's the case, then that's your prompt to say, hey, what went wrong? Two, you know what your expenses total every month. Therefore, you know what you cost to run as a thing. And three, if you have a goal or a target or a particular thing that you want to commit to, but you can't yet afford it, then you know how much you have to grow your income by in order to be able to, unlock that goal or achievement or change in your lifestyle, which is useful for your career planning in terms of knowing, what is it that you're looking for in your next move, maybe.
And are there any challenges to doing this practice?
Yeah, I think, like I said before, because it's incredibly boring, it's something that you're not going to do by default. But I guess I described it as like brushing your teeth. Maybe it's also like exercising. Once you do it the first few times, it gets slightly less painful and you start to see the benefits that come from it. And then it just becomes part of what you do all the time.
Did you ever find this boring at all, or was it something that you naturally were able to get into?
I think for the first decade that I tried, I thought this is such a pointless, mind-numbing exercise, and I already know what my income and expenses are because there's not that many line items. And yeah, that's probably true earlier on in life, but you'll either realize it or not that life gets pretty hectic pretty quickly, and it's really hard to stay on top of things. So by doing what feels kind of menial in the first instance and setting up that framework, as your life gets more and more hectic, you'll find that you can still be organized because you've got it in that framework.
Were there any things that you did to make it more fun?
Uh, Not really. I mean, maybe really sadly, I might have experimented with, the donuts or pie charts that made it look kind of interesting. So that would automatically populate every time you did it. I am aware that there are some budgeting tools now that are a bit more gamified. So you'll get some high fives or claps or celebration things fall off the screen. So, maybe that's empowering for some people, but personally doesn't make shift the dial that much for me.
I I'm gonna be honest here. Once again, I feel like I'm a moth to the flame of fun things amidst boring tasks. So I like the sound of visualizing all of that data. I really like the sound of that, and I might try it now. So how did you start setting aside the time to do it in the first place?
It's probably got more ingrained when I had to. So, when I had an ABN and I was doing some small business stuff as well, you have the obligation to actually capture that and report GST. I chose quarterly. You can do it annually if you prefer. So you have to. So that's a really great motivator to actually going and doing it. But on a personal level, even though you don't, it's a good practice to get into it so that you can easily kind of answer, can I afford this thing? Yes, no. And to manage kind of what discretionary things you can do rather than looking back on your end of month or your credit card statement and thinking, gee, what have I done? Because that's, not particularly ideal.
I'm now thinking maybe I should band together a bunch of friends who are in the same spot as me with this and just sit down and do it all together. And maybe that will make it a bit more like, oh, we are hanging out and doing our budgets at the same time.
Sure. I mean, people can be really defensive or embarrassed about it sometimes, but you could give it a go. And even if you don't share your screens with each other, at least you've kind of committed to doing it in the same room.
Yeah, I thought that was a great idea. So I think I might go along with it, but I don't know. I don't actually know how many people are going to say yes to this. I
Hey,
don't
it's
think
worth a
it's
shot.
very, yeah, I don't think it's a very, very agreeable activity, but I will definitely give it a shot. Um, and based on your experience, do you have any other recommendations of a similar kind of practice that you would combine with this?
Yeah, I think finding self-help tools that are out there can help to kind of consolidate that and ask, more deep questions around, what is your personal risk appetite, your investment philosophy, your lifestyle preferences, all that kind of stuff. I mean, it feels kind of like a combination of weird Facebook surveys, which I guess it kind of is, but having that all in one place, and some of those tools can connect to your bank accounts and actually play back to you a lot of those visuals, so you don't have to build them yourself from scratch. So one of those is Life Sherpa, which is an online tool that enables you to do that. I think there's a free version. There's also a subscription service that comes with that. So things like that can be quite helpful just to paint the picture a bit more broadly in terms of knowing, what are your goals, your current situation, how you've got to here, and also, more importantly, where you want to get to and what aspects you need to enhance. Because I guess two ways you can do it. One is you cut expenses. The other one is you either get a side hustle, a promotion, or some other job that pays, a higher rate after tax somehow, which enable you to reach your goals faster.
Now, moving on to questions from the audience. We have two today. The first one is, what should we prioritize in our mid-20s to lay the groundwork for early and financially comfortable retirement?
Yeah, I think mid-20s is an interesting time because you've probably got a decent kind of income, and for the first time you can feel like I can afford a whole bunch of stuff I couldn't, particularly while I was studying. I think the first bit of advice is don't. Even though you can, if you can hold out and delay some of those wants, particularly consumption related to some degree, that would be useful. Or two, if you can't, then at least find a cost-effective way of satisfying that need so that you can hang on to more of your wealth if you can. The other one would be learn how to invest really, really early. So that means, even though it's a meaningless amount, it might be like $100 or $1,000 that you're playing with. Say you want to go learn the stock market and that's your jam, and you want to use that as your primary tool for growing your wealth for the next 10, 20 years or whatever it is. The better that you get at timing your buys, your sells, and looking at a portfolio and kind of feeling good, bad, or indifferent about it, the better, because I think the later on that you do that in your life, the harder it is to undertake good habits.
Time is a limited resource. What should we invest our time in, irrespective of age, for the best returns?
It's a good question as well. I think when it comes to that, planning is more valuable than you think. So whilst it's much easier to find a quick fix and then rush into it, I think stepping back and seeing the whole sort of landscape and investing the time to know what is out there and what could you potentially be doing with it is a great place to start. Once you've built those good habits and have invested that initial sort of time, like I said before, coming back and revisiting it is a really quick exercise, and you can rely on the good work that you've already done before.
That sounds like a lot of work that I have to do overall. I'm just thinking about it all now, but I guess just taking the first steps, the mini steps, is going to make it feel more approachable, and I will do it when I get home. I promise you, I will not let you down.
Sure. Well, good luck
Now
with it.
we're moving on to the open mic section, and this is your chance to talk about anything you're passionate about that doesn't have to be related to the topic. If it can be related to the topic, if you're really passionate about it, that's fine. I'm not going to hold you back. You're passionate about what you're passionate about. So take it away, John.
Sure. Look, I think that broader theme of independence is probably relevant to it. So I think financial independence unlocks, like I said before, the opportunity to afford the lifestyle that you want to have. But that's in a broader framework of freedom in terms of spending your time how you want to, having flexibility around the kind of work you do and where and when you perform it. So I think that needs to be taken into account as part of a bigger picture. So in terms of if you're working 80-hour weeks to just barely afford the budget, that achieves the lifestyle that you currently think you enjoy, you might want to question that as well and think, and there's articles about the so-called lazy careers and so forth, where you can have an easy job that takes 30, 40 hours a week and then do some other side hustle that you really enjoy or that you're actually passionate about. Again, you can probably do that earlier in your life than you think. Most people would think, okay, I'll do the boring career thing till I'm like 50 or 60, and then I'll have paid for a house, had children, or whatever else that I wanted to do with my life. But then I'll have enough cash stashed up that I can open that cafe or do that other crazy thing that I always wanted to do. But the fact is, if you're just starting that when you're in that life stage, it's pretty hard. And it's starting any venture is going to be 100 hours a week and the hardest slog that you've ever sort of imagined. And I think what's really cool is there's a lot of young people who are entrepreneurial minded, and they're able to spend, a few hours a day or a week or whatever it is, to try out a dumb idea and see what happens with it. And some of them have turned into actual massive listed companies or businesses that would never have got off the ground if someone didn't just have a go at something kind of random. And I think getting to a point where you can actually drop your day job and then focus on doing that other thing, and it's not for everyone, but if that's what you're into, that's a pretty empowering thing, because then you get to spend your life your way. Although I say that, it's a bit contradictory, because if you do go into trade and commerce as an individual, you're probably going to spend more of your time doing it, and you'll feel nuts for doing so. But some people find that that's more empowering than anything else that they could do. But if that means even freeing up time to exercise more, to eat better, or to do stuff, at home more independently, or to take care of other people, for example, then those are all ways that you'd only be able to spend your life that way if you had sort of planned it. So I guess in the same way that I just talked about budgeting finances and using, various sort of products within the industry to help empower that life journey, I think before you even do that, make sure that that's the life journey you want to be on in the first place. You should also budget your time, right? In terms of, what am I actually spending it on? What do I want to do with my life in the long run? And am I allocating that time accordingly? Or am I neglecting a whole lot of things that are really important to me because I'm trying to hit some goal that I think is important, but actually I've got my goals wrong? So I think going back to the core, the heart and soul of, what are my actual life goals, and what do I want to achieve when I am 6 feet under, or burnt up and ashes flying around, or whatever it is that you choose to do with yourself. I think it's important to think about that bigger picture. And I guess that starts with the existentialism I referred to at the beginning.
That's so interesting how you tie finance in with existentialism, which is really something that I just never had that perspective. So I found it really interesting that you did that, and it honestly made me feel a bit more engrossed in the subject, if that even is a phrase that I can use. Is that something, does that accurately, it does make me feel more engrossed in the subject, because I really like finance. To me is like just numbers, and the way you just tied it in with philosophy and existentialism makes it very interesting and engaging to me. So I really like that, and I think it's amazing like how different people view what empowerment is. So thank you so much, JP, for enlightening us today. It was a very, very fun chat, as much as it's not even sarcasm. Like, I actually really enjoyed listening to it, particularly the way you tied in, once again, the way you tied in finance with existentialism. Really something I never thought I'd hear. So if our listeners want to find out more about you and what you do, where can they go?
The only platform I'm on is LinkedIn, so you just keep it consistently boring, but happy to connect and share other ideas, of course.
LinkedIn. All right, we'll put it down in the show notes. Thank you so much, JP, for your time today, and thank you everyone for tuning in. We will catch you in the next episode. You've been listening to the Self-Improvement Atlas, the Personal Science Insights podcast, produced by LMSL, the Life Management Science Labs. For more episodes like this from 10 different life management perspectives, search LMSL on YouTube, Apple Podcasts, Google Podcasts, and Spotify, or wherever you listen to podcasts so you can get updated on everything we have to offer. We have a wide range of topics readily available for you to check out. If you enjoyed this episode, please consider rating our show, sharing it, and subscribing to our channel as it helps us grow and bring you more quality resources. More of our work can be found on our website at pe.lmsl.net, where you can join our movement. I'm Marie Stella. Thanks for tuning in.